Good evening. Today is September 19th, 2019. Approximately, I'm just going to say 5:30 Eastern Standard Time. My name is Oluwale Okabolo of Spartacus Trading Corporation, where serious advanced traders come to trade and learn. Here to bring you a market report for tomorrow's pit session trade, which tomorrow will be September 20th, 2019. All right, let's jump right into it. Tomorrow it will be quadruple witching. So it's going to be a lot of stuff going on. Could be a little more volatility than usual. We shall see. So just be aware of the quadruple witching that's going on tomorrow. Starting off with the monthly contract, we are one time framing higher. Nothing has changed. Uh, we explored above August high. We're currently below August high. We'll just continue to monitor whether or not the market for the month of September can close above August high. That's the question. Can we close above August high on the monthly? On the weekly, same old story, higher lows or one time framing higher. 6 weeks, one, two, three, four, five, six. We're in an 8 week balance area. Within that 8 week balance area, we're currently in a 2 week balance area, but we're far above that 2 week half back, so I'm really not paying attention to that. On to the daily. One time framing higher one day. You can refer to yesterday's report where I talked about this excess low from yesterday after the Fed announcement. We didn't even get to chew into that. We opened above, as you can see. Not telling you anything you can't see for yourself. We opened above, slight gap, traded higher. We sold off. We ended the day back in yesterday's range, creating a 2 day balance area. We're above the 2 day half back, but the 2 day half back is something we want to pay attention to going into tomorrow. On to the profile. Um, Today, this is a formation I call a reverse P. Theory teaches you that a P formation is where the profile looks like a P and the market closed definitely at least in the middle or towards the high, not at the low. The reason why I call it a reverse P because we have that P-ish look and we close near the low. So that's a term I use. So I'm calling it a reverse P. Uh, let's just set up tomorrow or what could happen overnight. I talk about all the time how we got a lot of daytime inventory imbalances. I'm a day trader, so I focus in on that, but I'm not. I'm always paying attention to the auction of a longer time frame. Today we close with the inventory imbalance, and I'll walk you through. Um, we This is a term profile theory talks about where short-term traders are short in the hole, meaning they're selling below the fairest price of today, which that's this 8Y point of control. Value today is clearly higher. We also left a whole bunch of anomalies behind. So it signals that the market, when it was selling off, I guess starting from E and F period, market really wasn't selling off smoothly. You can also see from these gold prints how the point of control was migrating lower. So that was the tone of today. They closed the gap. I assume that's what they want. They also closed the spike base from yesterday. So they got that by one tick, which makes that a weak low as well. But we closed outside of value. So this is setting up for an overnight trade. One of the traders I train, one of his favorite trades is daytime inventory imbalances. He lives for this, and this is definitely your trade, Riz. So I hope you plan accordingly and take that trade. Usually, the move usually happens overnight. If it doesn't happen overnight, and say the market trades lower and we open lower and we come back in range, be careful. If you're short, be very, very careful because the market could catch a bid if these short-term traders start to cover and we can begin to adjust the out of balance daytime inventory. but more than likely it usually occurs in the overnight. An adjustment to the inventory imbalance for me is trading in and around the point of control. Anything above the point of control is gravy. So please keep that in mind. Okay, folks, showing you my Eagle Nest chart to support the daytime inventory imbalance. This is a reverse profile, volume being the a volume point of control. This is your traditional profile with a time point of control, volume, time. You can see that volume and time for today is clearly above. The market closed outside of that. The market failed to double distribute and hold a double distribution, or since it was at the end of the day, hold a spike. So basically, what am I saying? Coming into tomorrow, we want to pay attention to this 2 day halfback that I have marked on this chart. If the market can't, I would say the market can't gap and hold a gap, we're probably going to adjust this inventory if it does not get adjusted overnight. Why do I say that? Simply, all trends are up. The monthly trend is up to balancing, but it's up. The weekly trend is up to balancing, but it's up. And now the daily trend is up to balancing, but is up. All trends are up. You don't want to fight the trend. These folks who have gone home short, if they're still holding on to their position, they're fighting the current trend. In order to see some type of change, or at least a clue that change could occur, value will begin to develop below this 2 day half back, which means that value needs to be clearly lower tomorrow, and more than likely you need the gap and hold the gap. Then we can trade through the weekly open. This is where we open for the week, and then we can challenge the 2 week half back. I bring up this chart because I want to make you aware of something that could happen because it's on the table. Please refer to yesterday's report. Yesterday's report is the 18th, the 18th recap, preparing you for the 19th. That's that report. On that report, I talked about the significance. Come on. I talked about the significance of this 4, 1, 2, 3, 4, or 5, doesn't matter because we opened inside 4 or 5 day balance area where the market broke out of that balance area, signaling a new auction to the upside. We have since tested that breakout, which I talked about in detail, so please refer to that report so you clearly understand why am I revisiting this topic. We tested this breakout for the first time yesterday, found no acceptance. The market forced all the shorts to cover, and we closed near the high. That's the first test. The second test came last night during the overnight. So here's yesterday's profile signaling the first test. Here's the line signaling that previous balance area. The reason why my line is a little bit below the actual balance area high is because this is where the market broke out via double distribution. So I believe this is very important. It's not by coincidence. The overnight market stopped right back here. This is the second test, but this was a weak test in the overnight, and you see how the overnight rallied. It is not a coincidence that the overnight stopped there and rallied throughout the. I guess at this time this is Europe, so rallied throughout the pre-market because you got Asia for overnight, then the pre-market for Europe. It is not a coincidence. That's the second test. If, for example, tomorrow we have clearly lower value, value can build below the 2 day half back. 2 day half back, high, low, 2 days, high, low divided by 2 gives you a 2 day half back. If the market can begin to develop value begins to develop below the 2 day half back, and the market is weak, or if the market's in a liquidating mode or selling mode, whatever, doesn't matter, and we begin to one time frame, I don't believe this a third test. I believe a third test will bring in some more liquidation because it's basically the balance rules where you break out and accelerate, you break out and fail, and the destination becomes the opposite extreme, which I talked about in that report yesterday, or you remain in balance. Well, we did not remain in balance. We broke out, traded around, test yesterday, test last night or the pre-market, whatever you want to call it, and tomorrow to test again. You probably can get another bounce, but if we get another bounce at this area, which is, let's call it 91, more than likely is, and value is lower. The market's perhaps with quadruple witching, bringing in a little more volatility than usual. The market could be setting up for an awesome trade short. You short that rally. See, this doesn't come into play unless your first clue is values developing below the 2-day half back. That means we're trading in the second quadrant, not quadrant, we're trading in the second half of a 2-day balance area. So this can be very, very, very interesting. So pay attention to that going into tomorrow. Other than that, all trends are up. We can get that overnight correction or adjustment to the daytime inventory that's out of balance. I drew the anomalies 1, 2, 3, 4, 5, 6, showing that the market didn't trade smooth. Value is clearly higher today. Okay. The sell off wasn't that impressive. The volume was like 3 billion, 3.3 billion or something, but the range wasn't that big either at 20-point range. So take it for what it's worth. Bottom line is, if we get that overnight, we get that adjustment to the daytime inventory that's out of balance. If the market can hold that adjustment, don't take out this low, then more than likely we're trading with the trend because the trend is higher. I mean, the trends are up. All trends are up daily, weekly, monthly, as I showed you. So, something you want to pay attention to as you position yourself for the trade. Um, Another thing we can talk about, I don't do that. I think this is a 45-degree line where the market constantly sells from a certain area. Here, not a coincidence. They sold twice, matching highs here. Not a coincidence. Two ticks, selling here, selling in M, get you out of value, trying to sell again on N. So, more than likely, it's probably a 45-degree going down, meaning that, again, just supports my analysis that we are in a daytime inventory imbalance. Doesn't mean that the market cannot trade lower. It's just saying that the market, the daytime inventory, is out of balance. And so if the market can't get any acceptance below today's low, if the market cannot get any acceptance below today's low, watch out. With all trends are up, especially time frames higher than the day time frame, monthly, weekly, higher highs. If market cannot get any acceptance below yesterday's low, even though we'll stop one time framing on the daily, the longer time frames that trump the shorter time frames are up. Daytime inventory is out of balance. We could get a short covering rally. The only thing that would negate this analysis or theory that I'm putting before you is that we get clearly lower value. Value at least begins to overlap this 2-day half back, if not build lower, and then the market wants to test for the third time this level at 29.91. So tomorrow should be a very interesting day. If you're solid on structure, it should be very readable. That's all I got, folks. This is Olawale Okabola, Spartacus Trading Corporation, wishing you a good day. Take care.